Okay, it looks like we're live. Let me know if you can hear me properly and see me well. The title today is Fed Chairman Folds to Political Pressure and Takes the Route to Monetary Mayhem. Yeah. And we're going to have Clive Thompson as usual, and we're going to have Rafi Faber on today. He hasn't been on for a while, but it's always good to have him on. Yeah, not sure when they're going to come on. I always start a little earlier than scheduled, mainly because I want to say hello to everyone before we start, or I'll try to. Just AB Esquire says, good evening, Monaco 64 and Rudy. Greetings from the Scottish borders. Unfortunately, Rudy wants to be somewhere else in the house, so I couldn't get him to come down. But it doesn't matter. He's fine. Ricard from Sweden is here. Central banks are buying silver. Yeah, I made a video about that yesterday. It's not huge amounts, but the Saudi Central Bank bought SLV. And I know I've said that SLV is not real silver for retail investors, mainly because to take delivery, you need to be a big financial institution. And the minimum is 50,000 shares. So, but if you're a central bank, I think if you're buying SLV, it means you're looking for delivery. So we'll need to keep an eye on that. And that's really significant because the only country that officially was buying silver prior to the Saudis was Russia. They announced last year that they're going to be buying silver and platinum. Dutch Libertarian is here. Good day, Monaco 64. Hope you had a nice Sunday. Yeah, we had a really nice Sunday. I played golf this morning, came home. We had a nice Sunday lunch today. The weather is nice. Rudy's doing well. SQ7944. He just wanted to stay somewhere else with someone else in the room, in the house this evening. He's doing great. He's recovered from his infection he had. Yeah, he's perfectly all right. Joe's Triple Z from New Jersey. Hi, Joe. Lovely Voice 6. Good evening, Lovely Voice 6. Pino Kunchner says hello to all. Whole Silver K5X. Mark Sneed, hi Mario, Rudy, and fellow snackers. Bald Guy Money gave you a shout out today. Yeah, I know he told me that on X. We follow each other on X. Bald Guy Money. Stephen Brewster, hello Mario, and guests, and Rudy. Always great to watch your videos. Yeah, the guests should be coming on in a few minutes. Tsupi 197. I see that hell is coming sooner than anyone believes. Yeah, we'll talk about that. I mean, let's wait for the other two guys to come on. I kind of agree with that, and that hence the title of the live stream. The other thing I want to reiterate, yeah, ask as many questions as you can because it gets harder and harder in the comment section because we get so much spam. I try to delete it, but it's almost impossible. So this is a good time of the week to try to answer all your questions. James Thomas from Palm Springs, Florida says, greetings. Gaston Frank from Belgium. Henrik Schoblom from Sweden. Hi, Henrik. Nice to have people from all over the place. Tom Gallows, shouldn't it be dark outside over there? Not really. It's 5 to 8 p.m. Maybe when they put the clocks forward, it will be dark. I'm not sure when they're going to do that. Probably sometime in October, or it could be September. But in June, June 21st, I mean, it gets dark at 10. So there you go. Bruce T8, hi Mara from Maine, USA, longtime listener. Jethro Tull, Mayhem maybe. UK economy going to crash. I think it's already crashing. Andrew Watson, 8365. I've been warning about it for years, of course, and now it's here. I think a lot of the data are doctored. We see that the government wants to tax people they're going to tax everyone a lot. We've got currency debasement. Yeah, it's not great, but there's the old Chinese proverb or saying that when there's crisis, there's opportunity. And hopefully, a lot of you guys and girls have been stacking. I mean, I've been talking about that for almost 10 years. I think when I started the channel, gold was around £1,000 an ounce, and actually maybe even less. It was 700, 800 an ounce, and now we're at 2,500. So unfortunately, it's going to continue because there's no way out of fiat currency bubble than more and more debt. Of course, it'll all end in tears as the currency becomes worth less and less. Wavy McFly, what do you think of Danielle DiMartino Booth? She ran cover for Powell for 2 years, and now she pretends she didn't, and have her on and debate with her, please. Yeah, I have followed her like on X, and she's very, she wrote a book, Fed Up, I think. I didn't read it. And why? Well, because she's the kind of, she worked for the Dallas Fed, so she's pro-Fed. She just thinks the Fed needs reform. I think the Fed itself is anathema to free markets and freedom, and she isn't. And that's why I've got End the Fed mugs. And you got Rudy here with Thomas Jefferson. Yeah. And I've been pushing for that for many, many years. I first got the idea or learned about the concept of ending the Fed from Ron Paul, who I met in 2002 at the Mises Institute 20th anniversary conference in, yeah, 2002. And Durarama says the Saudis buying paper silver. Will this really make a difference? Yeah, I mean, yeah, there will be questions about that because it is a SLV ETF. I would say, if you look at the prospectus, that the people who actually take delivery of SLV are big financial institutions, authorized participants, and they have to do it in 50,000 shares at least. The Saudis they bought almost 1 million shares. So we need to keep an eye on that. I think central banks, they don't buy silver or gold to keep it in an ETF. I think they will take delivery. We'll have to keep an eye on that. And they might even be buying physical silver through other avenues that we don't even know. So Yves 19B says Bonsoir de France. Bonsoir Yves. C'est bien de t'avoir ici. So we'll speak a bit of French. Rafi is coming on, I think, in a minute, in a second, actually, and Clive as well. Hi, guys. Hi, Rafi.
Hey Mario, long time. Haven't seen you in a while.
Yeah, nice to see you. Yeah, don't know. It's just yeah, I can't wait as long next time to get
It's
one. Sorry about that.
okay. I just got home.
Yeah. Hi,
Was
Clive. How's Tigger?
Hello, Rafi. Hello, Mario. How are you?
Good, good. So I've been
And
answering some questions here. There's one guy here, Charles Schulten. Hi, Mario. According to Steve Henke, we need to focus on the money supply and not interest rates when discussing inflation woes. I agree with him. I mean, I've always said that inflation is not the CPI. The CPI is the consequence of inflation or the increase in money and credit. He seems to think that the money supply is not growing fast enough, but I kind of disagree with him because it's making all-time highs, the M2. Rafi, would you like to comment on that?
Is it? I'm checking it.
Yeah, I can bring it up
Okay.
from from
It's
from the Fed.
okay. I got 22 trillion here. I
Yeah,
don't I don't think that's enough, Mario. I think we need more.
yeah, definitely. And we just made an all-time high, Rafi. You-
22. Oh, right. 22 trillion on
Yeah, the
April
all-time high
14th.
in 2022 was 21 point, yeah, it was around here, 21.7 trillion.
Well, no, you're wrong
Oh,
because in on April 18th, 2022, I have 22.056 trillion and now it's 22.05 trillions.
oh, okay, okay. So, okay. Um, what about you, Clive? What do you think?
well, all my career, I've been teaching that the money supply is the cause of the prices going up or the value of money going down. But I've kind of changed my tune a little bit in the last couple of years, to add in government debt, because we moved into a world where the government is printing well, it's borrowing money, and as it borrows, it gets poorer, and everyone else gets richer because they get the cash. So at the end of the day, I think it's a combination of money supply and government debt which is driving prices higher. And we mustn't forget these T-bills which are out there. They're as good as cash. It's not like the old days where you had to rig a broker and go through a long process to sell them. Literally, you can sell them online these days and turn it into cash. So it's as good as cash as far as I'm concerned. So T-bills, short dated treasury notes, all of that, as far as I'm concerned, is, you don't have to call it money supply, but I call it as good as money supply, and that's increasing by about 7-8% a year at the moment.
Yeah, and deficit spending as well. I think I saw someone point out that the deficit in the US for next fiscal year is going to be 7.9 and also 7.9 for 2027, which
Is
is,
that, wait, that's counting as a percentage of GDP or
yeah,
okay.
yeah. I mean, it's huge. That's the kind of deficit you run when there's a crisis or a recession. Um, just to refresh for you guys, Clive and Rafi, the title today is Fed Chairman Folds to Political Pressure and Takes the Route to Monetary uh, Mayhem. It sounds a little bit like dramatic, but I think I don't know if you guys saw that picture of him arriving at Jackson Hole at the airport. He looked
with, with,
really,
with a walking stick.
yeah, he looked really rough and under pressure. And I think he's waited quite a bit, and now he's going to cut. And I think they're going to cut several times. And by the time he leaves, I don't think things are going to be great. But I think the prices or the consequence of inflation will only take place after he leaves. So he can always say, well, I try to keep rates tight, but I was pressured. I don't know if what you think. Let Rafi answer first about that.
Did he say he was pressured or did he just
No,
look
I'm
pressured?
just saying I think he was. That's my speculation.
All right. Well, what I'd say about this is that we are coming up on a hard wall here. I mean, if you, I'm trying to figure out how to phrase this. Because interest, look, lowering interest rates can only expand the money supply on a commercial banking level. It doesn't expand the monetary base. If we're going to get into the how the plumbing works, I don't know everything about how the plumbing works, but I understand this at least. The lowering interest rates will only encourage more loans from the commercial banks, but it can't increase the monetary base on which those loans are made. And the monetary base is the amount of money that isn't being loaned out and instead is earning interest at by the banks from the Fed is still like over $3 trillion. So lowering interest rates is not going to increase the money supply because the commercial banks, if they wanted to make loans, they would make it with the bank reserves that they already have, right? But they're not. So at this point, when you have what do they call it a tight reserve system. They have it like it's like there's three words. There's like something, there's ample, and then it's, there's like these three adjectives that they use to describe a regime of reserves. And what we were in before 2008 was like a tight reserves regime. So in that type of monetary system, yeah, lowering interest rates would increase the money supply because banks would make more loans because it would be easier to make them because interest rates are lower. So then you have more money supply. But in this environment of it's ample versus abundant. I'm not sure which
Yeah.
one's more. So it could be that abundant is more ample than ample, or ample is more ample than
Yeah.
abundant. I don't know. But it's not going to affect the money supply. It's just going to keep going in the trajectory that it was going until the plumbing hits a wall, which should be in the next few weeks, or any week now, because the amount of reserves is just about equal to the amount of repos that are being traded every night now.
Yeah, we got a super chat here. Hello, gents. How long do you think this golden commodities bull market will last? 5, 10, or 40 years? Well, I'll answer first. I think we've got another 5 to 10 years in gold. So yeah, in the commodities bull market. Why do I say that? Well, I listened to Bert Doman. He's he's a fund manager, and I think he started out in the 70s. He's originally from Germany, but he's US based. And he said that in the 70s, he got his clients into gold in the mid late 70s, and they did very well. And then in 1980, he told them, you need to get out of gold. We're going to have a 20-year bear market. And everyone thought he was crazy, but he was right. And then he said, but after that, there will be a 32-year bull market. And I think he looked at the price of gold going back a few hundred years in the UK, because the UK and the US are linked, the prices. So if you add 32 to 2000, you get 2032, and that's why I'm looking for another 5 years at least. But I think Jim Sinclair used to say that the next move higher in gold, let's say, it's not going to be like in 1980, because we went up to like almost 900, and then the next 20 years we drifted between 250 and 400. He thinks it's going to stay up there next time. It's going to be different. So I'll let Clive answer that.
Well, I think the bull market, if you like, if we could call it bull market in precious metals, continues until such time as the currency has to be replaced by sound money. So how long does it continue? I think at best, the currency we have up today is going to last another decade. And I mean, at best, I really don't think it's going to last that long at all. So whilst we're still in the currency system we're in, I believe we're going to see the gold price, the silver price pushing higher and higher and higher. And then at some point, there's going to be a crisis, a monetary crisis, an interest rate crisis, a bond crisis, a currency crisis. We don't know what it will be, or it'll be some external crisis, whether it be war or civil war or some event that we're not expecting, some black swan event. But these things come along and they'll be pushed into a situation where people are running to the shops to get anything which will preserve its value. And at that point, we'll start with a new currency of some description, or restrictions of what you can do with your old currency. And at that point, we go back into a new system with a new dollar or a new pound or a gold-backed currency. We don't know exactly how it's going to look. It might be the central bank digital currency where you've got restrictions on how much of your old currency you can put into the CBDC. Whatever it is, until we get to that new system, the gold price and the silver price, I think, has to go higher because there's literally more government debt coming into the planet, and that means someone else is getting that money, and they have to invest that money somewhere. And the more this government debt expands, the more they're going to choose an inflation hedge like gold.
Yeah, Rafi, how long more do you think we have in the gold bull market and commodities?
Um, I'm I don't think we're in okay, so we're in a gold bull market in commodities. That's true. Can I share a chart here? Am I
Yeah,
able to do that?
let me multiple. Yeah, go ahead.
Yeah, okay, so hold on here. Um, so this is the gold to CRB ratio. All right, so it goes back all the way to 2000, but I picked 2010 here just so you could see.
Yeah.
This is if we're in a gold bull market, then this is the value of gold in terms of other commodities. The higher it is, the higher the gold value is relative to other commodities. So, and we've been in a bull market since 2000, but there've been major pullbacks. Right, this is 2022 when gold and silver bottomed. I think silver bottomed at like $16 or something like that, maybe a little bit more, and we've been climbing ever since then. This was the lockdowns when oil went to negative 35, so that's why it went so high
Yeah.
here. But like we're about halfway up this spike when the lockdowns happened when oil went to negative. So if we're about halfway up this major spike, which was an all-time high, and other oil is not anywhere near negative now because the economy isn't shut down. So gold is it's going pretty fast now,
Yeah.
relative
And
to
I
everything
think
else.
also the question, I guess, I think commodities, yeah, they're lagging gold, of course, but I think in terms of fiat, yeah, they moved up quite a bit from March 2020. They had that huge drop, like with oil, and then they went up, and they've been consolidating. But I also expect commodities to do well. But they also, I think, Rafi lagged gold and silver in the 70s. So even though there will be good places in commodities, and they take turns, don't they? They go up at different times. We've got a super chat from Big Bus, Big Bus, Big BU Shape. Thank you. He says, sorry, can someone please answer if mortgage rates are based on long-term or short-term debt? Hope it makes sense. Yeah, I can see that he's in the UK because the super chat is in pounds. And in the UK, yeah, we don't take well, we do take long-term mortgages, but the rates are set short-term, like 2 and 5 years. So they are based on the like 2 year swap rate, they call it, and the 5 year. But I think long-term rates, what they've been going up a lot. They're making like highs, 27-year highs, like the 10 year, well, the 30-year yield. And what that will do is that's going to hurt the government. That's going to increase the deficit. That's going to inflate things even more. And I think the Bank of England is going to have a tough time cutting the short-term rate. So even though in the UK we don't use the 10 and 30-year rates to set mortgages, I think things are going to remain tough. Clive?
Well, banks, when they lend money for a mortgage, whether it's in the UK or any other country, they are effectively lending that money out for the next 20 or 30 years because they're not realistically expecting anyone to repay the mortgage in the next 6 months. So, of course, long-term rates have to have an effect on the interest rate they're going to charge you on the mortgage. Yes, there's an influence in the UK because they set the rate in some way to the 2 or 6 or 5 year term, and then it gets rolled over at a higher rate regularly. But at the end of the day, if long rates are pushing higher, the banks have got to have their heads screwed on and say, well, we've got to charge our customers a little bit more because at the end of the day, the alternative, we don't have to lend the customers the money on their mortgage. We could go and put the money into a 30-year bond, which is effectively the same thing, instead of lending it to my customer. So if the 30-year bond rates were to go to, say, 7%, you won't be able to, I don't think you'll be able to get a mortgage for less than seven, for sure.
Rafi, you got an opinion on that?
Yeah, so what Clive is saying makes logical sense. If a bank can lend the money to the government with much less risk than it can lend to somebody for a mortgage, with a much less de which much lower default risk to the government, obviously, then whether 30-year mortgage rates officially set mortgages or unofficially doesn't make that much of a difference. It makes a little bit of a difference maybe in short-term fluctuations and stuff, but there shouldn't be too much of a spread between 30. I mean, there shouldn't be more 30-year mortgage rates shouldn't be substantially lower than 30-year bond rates. It shouldn't be lower at all. But if it is lower, it shouldn't be that. It definitely shouldn't be that much lower. So yeah, their mortgages are set by long-term rates, either formally or informally.
Yeah, and I think in the UK that they've been using the 2-year swap rate or 5-year because let's say you take a 10 or 20, 30-year term for your mortgage, you renew it every 2 or 5 years. But uh, I think after the '08 crisis, rates were so low that they just focused on the two year yield or swap rate. But now the regime of low rates, I think that's finished. So yeah, I think yeah, don't be fooled. To that the Bank of England is going to cut rates and everything's going to be fine. And we
Yeah,
saw, Rafi, you were saying that cutting rates won't really necessarily help the money supply, and I kind of agree because they cut rates already 100 basis points since September last year, and the 10-year yield is up from 3.6 to 4.3. So who's to say that it won't go up again if the Fed starts cutting? I wanted to share with you guys. I got something, a clip from a viewer in New Zealand, and it's a radio show, and someone about finance, and someone calls in about gold, and it's really funny to see how financial advisors are really anti-gold. So I'll just play it here.
Up with the conversations. My guest is Andrew Baskant. He's co-CEO at Harbour Asset Management. We started talking about the OCR. We're talking about the vibe around growth in the economy and when's it going to kick in, when are we going to start feeling better about things? And the conversation it's been a rich tapestry. So we'll continue with that tapestry right now by saying good day to Christine. Hello.
Oh, hello. Is gogold.co.nz, like is gold a good investment for a beginner? Is there money in that?
We won't give you specific financial advice, and Andrew will weigh on that. I always think, though, from what I've heard, is that gold generally keeps pace with inflation and has some flash moments, and they're not so flash moments, but you can probably do better. But no specific financial advice. Andrew, tell me I'm wrong or right or whatever.
Well, first of all, you're right. No specific advice, particularly regarding gold. And I'm going to say something. I have never been an investor in gold, so I'm biased against this asset because it exhibits times of quite a lot of risk and volatility in your price. So you really don't know in a month, a year, or 2 year or 3 years' time where the gold price is going to be. Now, over the long term, it's kept running with inflation, right?
Yeah.
It's good. So the long
Whereas the S&P in the past 5 years,
sort of 3 times inflation, 4 times inflation.
Yeah.
So that's the question. So we know in the long term, the like 80 or 90 years, investing in a portfolio of equities gives you an 8.5 to 9% return per annum, and that's like 5-6% ahead of inflation. Gold, around about that inflation rate, right?
I always feel the need to sort of push back against people who like to talk about gold as if it's the big be-all and end-all. Because it's one of those things where people will talk about a particular moment in time. It's like, did you know the price of gold has gone up X in the past period? And I'm like, well, okay, all very well and good, but
I'm gonna stop.
If you
I'm gonna stop now.
Material.
But what I did, guys, is I looked for the price of gold in Kiwi dollars. So let's have a look. And this is one.
that's New Zealand.
Yeah, this is one New Zealand dollar, how many grams of gold it buys. So we can see here that in 1953, or 1960, sorry, it bought 1.23446 grams, and now it buys 0.0054. And according to fxtop.com, the Kiwi dollar is lost 100%. Well, 100% versus gold over, 65 years. So, and also, if you look at all the, like, since the beginning of the century, gold is up around 10% per annum in all of the major fiat currencies. So it just goes to show, this viewer sent this to me and said, no one out there in the mainstream financial world is telling their clients or people to buy any gold. So I think that's why we're still not near the end of a bull market.
I mean, I got to laugh, Mario, when I hear an investment manager with big inverted commas saying, I've never bought the best performing asset. You've got to wonder what sort of quality of investment manager you're dealing with. I mean, investment managers, they're supposed to have a diversified portfolio, and that might include the good and the bad. But to miss out an asset which is performing as well as gold and always has done, just I don't know what to say. Would you employ such a manager? I wouldn't.
Yeah, and here's the price of gold in New Zealand dollars. So it's gone from, it was even lower than the dollar, because the dollar, the low in the beginning of the century was $250. In Kiwi dollars, 178, and now it's almost 6,000. So I don't know where this guy's been for the last 25 years, if he's followed it. Rafi, any?
Well, yeah, so let's just flip what he said, because he's right that gold is not really an investment. I agree with him on that. I think it's a divestment. The question is, when you're trying to increase your wealth in stocks and bonds and whatever else it is that you want, what the stuff that you're not investing, are you going to have dollars or your currency or 30-year treasuries or whatever, or are you going to put your cash in gold? And in I guess stable times, then you wouldn't want gold. You'd want cash, because it would be more liquid, and you'd earn I don't know, a small return on it, whereas in gold you wouldn't. But in times like these, when the inflation cannot be stopped, the inflation of the money supply cannot be stopped, and the devaluation of the currency, which is essentially a gold derivative anyway. If you own the currency, you own bonds that are going to be defaulted on one way or another. So, if he is an investment manager, I'm not disagreeing with Clive, but just to put it in different language, yeah, investment managers usually don't have any gold, because gold is a divestment from the financial system. It's not an investment in it. Uh, that's
Yeah,
just the truth.
I agree. I mean, I think if you look at the 80s until the year 2000, it was like that. Gold was didn't go, it went sideways, and even if you'd bought it in the 70s, you'd still be okay holding it. But I think since the year 2000, things have become a lot more uncertain. So it has kind of acted like an investment because it's gone up a lot. But I guess a true investment would be investing in the mining stocks in gold and silver. So, yeah. Let's see if we've got more
Yeah,
questions
and
here.
those are
Yeah.
doing really well lately. I'm
Oh,
finally
yeah.
getting excited about them.
Let's have a look, because I've got some charts here, Rafi. Let's look at the SILJ, which is the ETF for the silver miners. And yeah, so that's really, I mean, it's only goes back to 2013, but we're not, yeah, we're approaching the highs, and this looks like a head and shoulder, inverted head and shoulder, and we've broken the neckline. So I think we could go the same distance from here to here. Uh, so yeah, I think it looks. And have you guys noticed recently when gold and silver go down that the miners have held really steady? In the past, when you saw gold and silver go down a little bit, the miners really dumped.
Yeah.
Yep. I mean, there's been a sea change in the behavior of gold mining stocks relative to the gold price. We've been through some decades, at least a decade, where the gold miners have been a big underperformer. Gold's been going up, stocks have been going up, and the gold miners have been the dogs of the world. But starting from around the start of this year, gold miners have been outperforming significantly the gold price and outperforming the Dow, the S&P 500, and funnily enough, Nasdaq too. So,
Yeah.
in fact, they've also outperformed Bitcoin this year. So the money is drifting, and don't forget the sector is tiny, tiny. It's like 600, 700 billion dollars compared with, say, a Microsoft, which is $4 trillion. So only a tiny bit of money is drifting into that sector, but it's pushing the prices higher almost day by day this year.
Yeah, and it looks like the GDXJ, that's breaking out, but it's lagging because if you look at GDX, it's near the 2011 high, and I think it's going to blow right through it. Yeah, there might be a little bit of corrections around the highs. Rafi, what do you think?
I think that when miners lead the metals, it means that that means that the bull market is just starting. And I think that's what's going on now. And miners have been hated for so long that still there's almost nobody in the sector. If you ask anyone who has a stock portfolio or even talks about, do you have any gold or silver miners? You're like, what are you crazy? No. But I mean, I really want to see what's going to happen to the gold and silver miners and the streamers and all those other stocks. What's going to happen when the Magnificent Seven and do they still call them the Netflix? What do they call those? They had an
The
acronym for them.
fangs. You
The
think of the
FANGs.
fangs.
Bang.
Yeah, the FANGs and Nvidia and all that. When they really start to fall, and people really start to panic, then what's going to happen to the gold miners? I think they're going to go down, but I think they're going to go down very, relatively minorly
Yeah.
down. They might even go up. I don't know. I mean, if money panics out of the tech stocks and into gold, if gold is heading higher on some kind of realignment, then you could see gold mining stocks and silver mining stocks go up, even if tech crashes. I don't think it's going to happen, but I think it's possible.
You
Yeah.
know, by and
Sorry, go
large,
ahead,
the
Fly.
by and large, the gold mining and the silver mining stocks are relatively cheap. If you look at the price earnings ratio for the current year, 2025, you'll see that many of them are trading at price earnings ratio of close to 10, some below, some a little bit higher. But there's a huge difference between the price earnings ratio of these gold mining stocks. So a low price earnings ratio means relatively cheap, and the very high price earnings ratios we're seeing in the FANGs and the Mag 7, where the ratios are typically well over 30 times earnings. So 30 times earnings means if you buy a stock, you might have to wait 30 years before it earns what you paid for it. 10 times earnings means our P of 10 means you might have to wait 10 years before it earns what you paid for it. But of course, the advantage of the gold shares is the one thing which they're selling, which is gold, has risen in price since they calculated those price earnings ratios. So if you see a price earnings ratio of 10 on a gold mining stock now, it means that probably next year the price earnings ratio is going to be 7 or 5 because the profit they're going to make will be much higher due to the fact that the price of gold has risen since they calculated or last calculated that price earnings ratio. So the value of the value of gold mining stocks is incredibly cheap compared with every other sector of the market, and yet nobody's woken up and realized it yet. But I can see because the index of gold mining stocks is rising faster than everything else. Some people have woken up, but it's still very small money and it's still very early stages.
So I've drawn up here the GDX versus the Nasdaq 100. So in the from beginning of this year till like I think it was April 21st, it outperformed the Nasdaq 100 massively, and that was when you had the that big drop in the stock market after that Trump Liberation Day in the beginning of April, and then
Mhm.
the market has rebounded, the Nasdaq, so as normal, it rebounded quicker or, than the miners, GDX. But now looks like it's breaking out again. So yeah, Rafi, it's difficult to say what they will do, but in relative terms, I think they will, even if they might just not drop at all. If if the Nasdaq drops 10% and the miners go down 1%, that's a big victory, I think. So that's how I see it.
Looking at your chart, you've got is it 5 weeks in a row, or is it 6 weeks in a row where the miners have outperformed Nasdaq?
Five, yeah. One, two, three, four, five. Yeah.
So I think we're right at the beginning here, and that the chart will probably continue behaving as you see with the green lines going up, i.e., mining outperforming stocks. So as you say, Mario, if the Nasdaq drops 8, 6, 10%, we'll probably see the miners drop as well because when markets go down, everything goes down. But they won't go down nearly as much, in my opinion, because I think people will say, "Oh God, I've just raised some cash by selling Nasdaq. What can I put it into?" Now, most of the money is not going to go to the miners. Most of it's going to go into the other big sectors of the market, probably things like energy or healthcare. But some of it, I think, will go to the miners, and it only takes a very tiny amount of money going to the miners because of the very small size of the mining sector at about 690 billion. And as I said, lots of big companies in the United States are worth trillions. So even a fraction of one of these big companies could buy the entire mining sector.
Yeah, I did like a research a little bit a week or two ago, and apparently only 1% of investable assets are in the precious metal sector in the US. So there's so much room, for that sector to do really well. Someone mentioned Avino silver and gold mines, that it's tripled. Yeah, I don't like to give tips, but actually I had that stock. It was Eric Young or King Kong. He told me about that, and I bought it below $1, and it went up to even four. I got out of it now, and I went into other things. And what I say to people is if they want to look at the miners, to go into the GDX, GDXJ, and if you don't want to buy the ETF, look at their holdings and yeah, do your research. And there's so many companies out there. And exploration, the junior miners, that's a different story, but they can be quite rewarding, but also a dog.
I mean, if I can add some help to those people who want to do their own research, I've been doing literally months and months of research on gold and silver miners, and uh, the gist of what I think you have to do is look, first of all, you would need to look for miners which are either producing gold already or will be producing this year or next year and selling it at a profit. That's a very important point. So when you're looking at a gold or silver miner, one of the things you can look at is what's called the AISC, which is the all-in selling manufacturing cost. It's how much it costs them to make the gold, and then you could compare that with the current gold price. And the difference between the two is the profit they're going to make effectively. They might have some other expenses around that, but all you now have to do is look at how many ounces they produced last year, multiply it by the difference between the gold price last year and the AIS, the all-in cost of manufacturing last year. Then you take the number of ounces they're going to make this year, and you can find out from reading their website if they're going to have more or less, and multiply the new number by the difference between the spot price of gold and take last year's all-in mining cost, add maybe 5 or 10% for inflation, and you'll see what their profit's going to be. And you'll find in a lot of cases that you've got a much higher profit due to the much higher selling price that they got now. And in some cases, you've got a higher gold or silver production than a year ago. And of course, that's the ideal situation if you've got more ounces going to be sold next year and at a higher price.
Rafi, have you were involved in the miners, aren't you?
Yeah, I don't trade them actively. I've
Yeah.
had positions since I slowly built positions starting in 2012 and then bought more, around 2014, 2015, and then bought even more in the 2020 crash. So I've never been as high as I am now. I'm still not that high. But I just feel a little sense of an accomplishment because I was able to hold through the 2015 bottom, and that was really difficult because I had to convince my wife that we were doing the right thing, and we had to really cut back. And like, I'm not crazy. This is the right thing to do. And but it was going through all that, and like she trusted me, and now it's paying off. So we'll
Wow,
see where it goes.
you've really held on. Uh, yeah, that's good. I mean, I've been in the minors on and off in the last 5, 6 years, but I'm happy with what it's doing now. And yeah, sometimes I think also with the minors, uh, I don't trade it either, Rafi. I do sometimes sell positions and just because I think they're overdone, but
Hmm.
sometimes I think it's good to if you have a company and it goes up 3 or 4 times, like a Vino, maybe take a little bit of profit, buy other ones, and maybe even spend the money because I remember in '05 I started building my own. I took some money out of my private pension, and in the UK you can do a SIP, which is a self-invested private pension and I looked at the Tocqueville fund, which was a gold fund back then, mining fund. There's no GDX or GDXJ, and I looked at the companies and I built a portfolio, and it did really well. And then I think in 2011, yeah, or 2008. But the gist of it is I didn't get out as quickly as I should have. And yeah, I didn't make as much as I had at the top. So you got to be really careful with that. Marcus Aurelius, AU, asks, gold ETF or physical gold? Well, I'll answer first. Physical gold every time. And you might think, yeah, gold ETF is a good exposure to the gold price, but by buying gold ETF, you're playing into the banker's game because they don't want the general public to have physical. And unless you're a huge hedge fund or or unless you're like the Saudi central bank who bought they bought SLV recently, you can't take delivery of the physical. So yeah, I'm for physical, but I can understand, excuse me, that some people it's not practical for them to buy physical. So yeah, last resort, yeah, you can get the ETF. But Clive, maybe you can chime in because you think that the ETF could be used for confiscation because it would be a lot easier to confiscate the physical from an ETF, which is centralized and going around the whole country trying to get gold from, John Doe or Jane Doe.
Well, first of all, what you say is true. It would be easier to confiscate the gold out of an ETF, but there's no real reason why any government would want to do that or need to do that at the moment. They don't have to pay their bills in gold. They've got no obligation to deliver gold to their citizens. So, what would be the advantage of a government confiscating the gold other than have more gold? But they could just levy a tax on everybody. So give us 10% of your Nvidia shares if you want. So why would they go after gold? It doesn't make sense. So I don't think I don't think there's any danger really. But you have to realize there is another danger, and that is related to who you are and where you are and what you're doing. If tomorrow a war breaks out with somebody and you're best friends with the enemy, well, you might suddenly find all your accounts are frozen. As many people did find out, such as Abramovich in the UK, when Russia invaded Ukraine, he suddenly found that his accounts all around the world, well, not all around the world, but in most countries, suddenly got frozen. He couldn't mobilize things. They even tried to seize his yachts and things. So there's a reason not to have all your assets held by custodians because you're beholden to their saying, we give you permission to have your money back. So it makes a lot of sense to have some of your assets, no matter who you are, outside of the system. And obviously, depending on your situation, whether you come from a friendly country, an enemy country, or whether you happen to be, let's say, an American or not an American, and I say that with a bit of a smile on my face because we see that Americans run into all kinds of trouble when they try to bank overseas and get their money. It does make sense to have some of your assets in a physical form, which you can lay your hands on in a hurry.
Yeah. So I'll just chime in here on a personal experience of having confiscation from an ETF. I'm not Russian. I'm not pro-Russia. I'm not anti-Russia. I don't really care about what's going on so much, or understand, the intricacies of it that well. But I had the ERUS ETF. Why? Because I thought, Russia is a decent investment, and I like some of the companies in the ETF. So I had a small position in ERUS, and it was confiscated from me, and I now have nothing. Thank God it was only a small position. So I was upset. I wasn't going to call anybody and protest or anything. I didn't have the energy, and I just bit the bullet, and that was it. So to answer what Clive was saying, yeah, under the current circumstances, there's a very small chance that they would confiscate the gold and GLD or anything like that. But they would only be motivated to do that if the currency was actually in free fall and they had no, and taxing wouldn't help, and it was just losing all value. Then they would go after the ETF. So if your plan for your gold position is to get through the end game, GLD is not going to help you. You need physical. But if you want to trade, then GLD is much better vehicle than physical. And you can play both. There's a way to play both sides. One of the things that I do is I have options on one of the gold ETFs, a small position. Every 2 years I buy way out of the money call options on the biggest ETFs with the smallest premiums, with the thought that eventually that's going to pay off. And finally, when I bought them in 2023, I bought a few options on IAU, like way out of the money, like the strike that was the farthest out I could get. And finally, I'm up like 20 times on it. It's a nice little profit that you can take, and you can like tease the bankers, play with them a little bit, but don't put too much money in. But you can have your cake and eat it too in this situation if you want to.
Yes.
Well, actually, Rafi, you do remind me of a couple of situations where I got caught out with having assets inverted, in a certain sense, seized. One of them was I happened to own a UK company which happened to be mining gold in Russia. And at the moment of the invasion, I was told by my bank that my asset in that particular UK company was and frozen because it was doing business with Russia,
Is that
and I
Peter
couldn't.
Hambro Mining,
No,
Clive?
it was called Polyus.
Oh,
Polyus.
yeah, because I tried to buy Peter Hambro Mining when everything kicked off in Ukraine, because well, it used to be a UK company, uh, started by Peter Hambro, but they mined in Siberia, and then they got bought out by the Russians, and it was called now Petropavlovsk, and it really dumped when Russia invaded. And I went in my trading system, and it was being quoted, and I was trying to buy it, and they said you can't buy. But they allowed other big institutions to buy, like the big banks. That was a bit annoying. Someone is asking the question about custody, and leaving your physical gold with depositories, how risky that is. I guess diversification there is the other word, key word, but that's more for people who have, millions of dollars in gold. I guess they would diversify geographically as well. Like Singapore apparently is a good place to leave store your gold. Switzerland as well, even though the Swiss actually froze Russian assets. So Switzerland is kind of yeah, they kind of you know went back on their word there. London as well is not bad, even though some people might think not because of the current government. But all throughout World War II, loads of countries left gold here, and it was fine, except for actually, I have to say that except for Czechoslovakia, when the Germans invaded Czechoslovakia in 1938, the Bank of England let the Germans have the Czechoslovak gold that was at the BIS account with the Bank of England. So at the end of the day, you can't really trust anyone, I would say. But Rafi, I think a dirty man safe could be a solution. Not the total solution, but it could help. So yeah, Rafi also promotes Dirty Men Safe, and if you're interested, have a look below in the description. It's a great way to hide some of your gold and other stuff as well.
Mario, we should talk about what size gold bars people should buy. The big ones, the little ones, the middle-sized ones. What's your view here?
Well, here in the UK, I try to stay away from gold bars because they're not coins of the realm, and with sovereigns and Britannia 1 ounce Britannias, there's no capital gains if you were to buy gold at 2,000 pounds and sell it at 10,000 pounds. Uh, yeah, you wouldn't have to declare any capital gains. But in other countries where there isn't that problem, I would say the 1 ounce gold bars. There's the 50-gram bars are very common. The Swiss do the 100 and 250 gram. And for wealthier people who have a lot more to put into gold, kilo bars, yeah, 200, there's 250-gram bars as well.
If you buy
Yeah.
a 1 kilogram bar, you're going to pay a very small premium over the gold price. Whereas if you buy smaller sizes, the premium tends to rise. So buying a kilogram, you might be paying 1% over, 2% over, something like that. But when you get down to 1 ounce bar, you're probably paying 3 or 4% over for the privilege of having a small bar. I personally think it's worth paying that premium to have something which you can peel off and use in small quantities. Because if the push comes to the shove, and you've got a 1 kilogram bar and you want to spend, I don't know, $50 worth of it, you can't do that. Whereas you've got lots of very small bars, you can actually go down. You might be able to, if you're lucky, go and find somebody who'll give you change for that.
Rafi, any view on that?
Yeah, I don't actually have any gold bars. I have maybe small gifts that I've gotten, like a gram or two in a bar form. I don't have enough money to buy gold bars. But whenever I have extra dollars, I do buy coins. Um, you know, yeah, coins of the realm. Or not, Israel doesn't have any gold coins, so I usually just stick with US. I think Miles Franklin had these, they weren't numismatic, but they were in a numismatic case. Like numismatic, maybe like a tiny premium, like maybe if the bullion premium was like 3%, maybe this numismatic premium was like 5 or 6 or something. I'm willing to pay that just to have a US coin from, the 40s
Yeah.
or the 30s or the 40s or whatever. But anything that's recognizable as American, something that I recognize that will have better liquidity in the market, I think it would just trade better than a bar.
Yeah, I agree.
I
Um,
mean, in the UK, the British sovereigns are great because, first of all, for British investors, they won't be taxable. But secondly, they're much smaller than the 1 ounce coin and therefore much more divisible. And you can buy them in large quantities.
Yeah, and did you know that, like, until recently, all US Air Force pilots, when they did special ops, like a special mission, they were given a bag with gold sovereigns, like, especially in the Middle East, if they got shot down, they'd have some because it's very recognizable everywhere as well, the sovereign. But we were talking about confiscation and governments, and one of the reason why they confiscated the gold or, pushed people to hand in their gold, basically in the 30s in the US is because the governments and the banks were going bankrupt, so they needed the gold. Uh, and Even President Trump mentioned that some months ago that they weren't sure if the gold was there, that they need to look into it. There's all this push for an audit, and now that's all forgotten. And Ronan Manley from Bullion Star and Bullion Brief, he's asking the question now, what happened to this? because Senator Rand Paul, he requested an audit of the gold at Fort Knox, and nothing's happened. And this was in February, so 6 months ago.
Well,
And he's
it went the way of the Epstein list. That's where it went.
he's requested a reply by 19th of March. I guess he didn't. I don't know if he got one, but it's not been published, I guess.
Well, I think Besant just said, "Oh, we do an audit every year," which is rubbish. Don't know where he got that from. But yeah, Rafi, yeah, we haven't spoken in a while, but just wanted to ask you your view on I mean, Clive and I have been talking about it, gold revaluation. Do you think that's a pipe dream? But even the Federal Reserve Board published an article at the beginning of August talking how it would be done in countries that have done. And I didn't know that Germany had revalued its gold back in the late 90s and Italy as well.
Yeah, so I looked at that article and it was talking about very minor cases of a fraction of gold reserves being revalued relative to some special bond issuance somewhere, but it wasn't like a major revaluation like in 1933, straight up from 21 to 35 on everything. Well, they were very minor revaluations, but we saw what I don't think a statutory revaluation is going to happen. It's possible. I wouldn't be against it because that would just bring on the end game completely. But I think what we're talking about is a market revaluation, which is when gold keeps going higher and higher and higher by market forces. That is a revaluation. It's the same thing. If it does happen, if it happens statutorily, then we can look, forgetting about all the little minor cases that are quoted in this Fed paper on the New York Fed's website by some, recent grad student. I think he just graduated grad school or something. The young looking guy, maybe late 20s. But forget about all the cases that he cites. Just look at what happened in 1933 to the price of everything. If you take the price inflation statistics, the CPI statistics following the April 1933 gold revaluation, within 2 or 3 years, the price inflation statistics went from like -6 to like positive double digits. So that was only a 66% revaluation. Now we're talking about a revaluation from 42 to 40 to, let's say, by the time you do it, it'll be 4,200, like 100 times revaluation. It's going to be
Yeah.
compare 100 times to 2/3. I mean,
I
it's not
think
even
you
comparable.
I think you mentioned it because we did speak about this early this year. Now I remember. You said that right now the market price of gold is uh, there's a relationship between the market price and the 42.22.
Yeah.
So even if you revalued it to $100, that would be massively bullish because the price is going to be based on something that's like almost, 2.5 times more valuable than the previous price. So, like you said, I think a few months ago, that if you revalue it to 3,500, gold is it's the end game. Gold is gonna go to like 100,000, and it's gonna be the end of the dollar and everything else.
Yep. Yeah, it's going to be. I don't know if it's not going to be overnight, but it would be, I think, within months, you'd see gold start really to skyrocket in a scary way, and the banks would collapse.
On the question of gold revaluation, there was and still is, if you like, a very interesting clause in the thing called the Bitcoin Act from Cynthia Loomis in the United States. And I'd just like to read the relevant clause about gold.
Is that the Genius Act as well now? Is that the one that passed? I think it is, isn't it?
I think that
I
has to do
haven't
with
seen that
stable
one.
coins.
This
Yeah.
is about gold. This is about gold. It's in what's called the Bitcoin Act, which is not law. It's stuck in the banking committee or somewhere like
Okay.
that. But I'll read this to you. This is one of the clauses of the Bitcoin Act. Not later than 180 days after the enactment of this act, the Federal Reserve banks shall tender all outstanding gold certificates in their custody to the Secretary of the Treasury. Not later than 90 days after the tender of the last certificate, the Treasury, the Secretary of the Treasury, shall issue new gold certificates to the Federal Reserve that reflect the fair market value price of gold held against such certificates by the Treasury as of that date. And then upon issue by the Secretary, each Federal Reserve Bank that receives a new gold certificate shall remit the difference in cash value between the old and the new gold certificates to the Secretary for deposit in the General Fund within 90 days. Putting that into English, they're basically planning, if this bill was to ever pass, in that bill, to basically revalue gold at the market price, and then the Federal Reserve would have to pay the difference in money terms to the government, and it would basically be free money for the government with no increase in the government debt whatsoever. The government would still keep its gold. It would be issuing in exchange this gold certificate, which has no maturity date. It's not redeemable and it's not convertible to gold. So basically, they get a lot of money for nothing.
Is that because they're going to use that money to buy Bitcoin? Because recently, Besant said that they don't plan to buy any Bitcoin. They're just holding on to the Bitcoin that the government has confiscated from like criminals and stuff.
Yes, indeed. That comes under the clause. The heading of the clause is offsetting the cost of the strategic Bitcoin reserve. So
Yeah.
yes, it's going to be a source of funds for that particular
Yeah,
purpose.
there's a super chat here. Thank you, Avira. A viral path, AK 1150. Hi, wouldn't the floor price of gold settle at the gold revaluation rate, presuming there is a revaluation post-commodity bull market at a minimum? Uh, well, in 1972, they revalued from 35 to 38. And then in 73 from 38 to 42.22. And by that time, the price of gold was like almost 100 and it just kept going. So yes, if they were to revalue and they had a new statutory price, I think that would be like a put in the market, and gold would never again go below that price. FC Kavija, thank you for your super chat. This is a question that Clive might know a bit more. I don't know if Rafi follows, what's his name? The guy who,
Michael Saylor.
yeah, MicroStrategy. At what
I
price does MicroStrategy have to liquidate? I think they're already the share price is dropping quite a bit, and I think Michael Saylor during the dot-com bubble, he lost $6 billion in one day. So I'll let Clive answer first and then Rafi.
There's been a lot of articles suggesting that if the Bitcoin price was to go down below a certain trigger level, then MicroStrategy would be bankrupt. And I've seen quite a few different numbers mentioned and often repeated, but nobody that I've seen has ever done any work to work it out. So I took the initiative to get one of the artificial intelligence engines to work it out for me. They came up, they came up with a completely different number than everybody else. I'm not going to say that number because I don't know that that number is right either. I haven't done the work. But let me just say that the number they came up with, and by the way, they suggested that the workings by other people who published a number were wrong because there's many special conditions which apply to the bonds which have been issued by MicroStrategy. But long and short of it was the level at which there'd be a problem is not where people are thinking that there's a problem. It's actually, according to AI, and not me, according to AI, it's somewhat lower. I'd love to work on it, but it sounds like a really big job to do manually.
Rafi, any
um,
opinion on Michael Saylor? And
well, my thoughts on Michael Saylor is that if he succeeds and makes people's lives better in a long-term way, then there is no justice in this world and everything is insane.
yeah,
Um, I, it's not going to happen. There are people that are just addicted to this sort of sensationalist insanity, And Michael Saylor is one of those people. They just
Yeah.
go into bubbles and they pump them up and they get really excited about them and they make other people really excited about them and they sound stupider every time, but every time people fall for it, no matter what. I mean, in dot-com, at least there were companies. In Bitcoin, they're not even talking about a thing.
Yeah.
Like I don't even. There's not much more I can say about this.
Yeah. I guess he's could be the John Law of the 21st century. Uh,
And
and
it is a micro strategy. His strategy is very micro. It's one thing, buy Bitcoin. That's his entire strategy. So it's a very
And
Shmo Kenhu, as his name is, so it
Clive,
is.
I've got a
That's his name.
question here that I think you might have an answer for. I'm not really. I know it's not huge, but it says, "What is total from William PMCD? What is the total approximate market cap for silver, including all ETFs, bullion, and mining?" I think it's about 300 billion, isn't it, Clive?
well, the silver miners. In fact, I've got the answer on my screen. Just haven't got it in front of me. The silver miners is tiny, tiny compared with the gold miners. Um, I haven't got it right in front of me, but I could find it very quickly. But I just added it up today because I took every silver miner I could find on the planet, and to do that I took the SIL and the SILJ and looked at what was inside them, added up. I've dumped them into an Excel spreadsheet, added up all the market caps, and the number I came to, I was astonished how low it was. Let me see if I can open it up quickly while then I can give you the number. Hold on a second.
Yeah. I'm doing something here. I'm cheating. Uh,
You're asking AI.
yeah. Chat GPT. Bottom line, a conservative estimate based on aggregate public data suggests the total market cap of silver mining firms is in the hundreds of billions, most commonly around 150 billion. Yeah. What about
Okay.
silver? I think above ground silver 2.157 trillion. Yeah,
Okay. I've got the answer for the silver miners. Um, the top 40 companies, and the rest are worth almost nothing. The top 40 companies come to $127 billion.
yeah, yeah.
The rest will add 3 or 4 billion to that because the rest are companies. But when I'm getting down to that, I'm getting down to companies which are worth 30, 40 million, nothing. I know below that there's nothing. So probably about 130, $135 billion in total is the total value of all the silver miners. As to how much silver's above the ground, I haven't done that. I don't know.
Yeah, and that's difficult to know. I mean, because and that doesn't really mean a lot of that silver is not going to be sold unless the price is very high. I heard something that I think it was a book uh, on silver by William Silber, who I've had on. He's actually a professor at New York University, Stern School of Business, and he actually worked for the New York Fed, was an advisor, and he said that in the 70s bull market in 1980, there was something called the big melt. People actually sold all their silver numismatic coins because the price went up so much. So that could happen too, which would be a shame because I like collecting silver coins. Rafi, have you got an idea how much all the above ground silver's worth or?
Well, let me answer philosophically.
Yeah.
The above ground silver market cap is worth however many ounces of silver it's worth, because silver is money and the dollar
Yeah.
amount doesn't matter.
Good. Yeah, that was a good one, Rafi. Yeah. Yeah. Yeah, you should look at gold and silver in grams, ounces, and tons. Yeah, tons. If you look at it in tons, you're doing okay, right?
The question is how much stuff can all the silver that's above ground buy you?
Mm.
And the answer is that when the dollar collapses, all of it.
Great. Yeah, so we are at the hour mark, and I'm gonna thank Rafi and Clive for coming on, and I really enjoyed it. We'll hopefully do it more often, and also the viewers. And yeah, wish you all a great coming week. And yeah, the world is not going to get more stable. So hold on. I say hold on to your gold and silver.
Yeah.
Thanks very much. Bye bye, everybody.
Bye, everyone.
Bye.
Thanks, Rafi. Thanks, Clive. Let's end the stream. All right. Okay.
So has the stream ended?
Yeah.
Yeah. So just